Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, February 28th, 2025. It's 4:39 p.m. Markets are now closed. As I mentioned this morning, I had an appointment this afternoon, so I am back and gonna give you the market wrap I promised to give you. So let's rewind a little bit. Start out this morning. Got one out to you in pre-market. With my thoughts. It was the post on Bitcoin, but then I included the charts of the market and told you, I suspect we'd bounce today. And the reasons were, of course, in there. But, one of the biggest is we're at just major support. I mean, there's probably no better support, or there certainly isn't right now in the market than the bottom of that trading range I've been harping on forever. Again, it's so obvious a blind man could see it. It's very clear. It's contained all the pullbacks since we entered that range back in late November. It also was a back test and has been of the previous all-time high. Remember, we had that July high. We nailed the entry there. We went shorted that thing down, covered the morning on August 5th lows when we hit the 200 days on so many stocks and indexes, and reversed that up. And so this is a back test of that previous high back then, the all-time high in the market. So if and when it goes, which I still suspect in favor it going, and then the 200 going. But as I said this morning, and I say often, support is support until unless broken. So this is that, expected one last hurrah off there. And that's what we got. Now we'll see if it turns out to be more. There's nothing at all that says that we can't now go back to the top of the range and even then go on to break out. It is not my preferred scenario. It has not been. But what happened is that we had that short entry last time right at the top of the range, highlighted that, and had the arrows taking us down to the bottom and ultimately breaking through. But I had arrow breaks. If you go back to, where was it? The recent, I think it was NQ futures. Arrow breaks are where a reaction's likely. So I had one last reaction there at the bottom, which that's what I think this is. And then we'll see. I suspect it'll probably go soon and probably next week. However, I'm going to show you levels to watch and where I might change my mind. So here's a level. I'm going to add it here. I just kept this kind of a clean chart, just boxed in the trading range. Nice support about actually where we closed there. You can see these previous reaction lows. I'll show you where and what I did and how I'm going home for the weekend. But that's the bounce off support. Today's green candle, 60-minute chart. Again, same trading range. That's where we were. A little downtrend line. And then this level right here, 510.43, is first significant resistance I've had here on the 60-minute chart. Now, that's all I was looking for. Here, I'll even drill down and show you on the 5-minute charts of NQ. Where is it? I have one. This is what I was looking for today. So what I did is reverse this morning since I suspected a bounce. If I think there's a better chance of a bounce versus going down, I'm obviously going to try to game it as an active trader. But was it a 15-minute chart right here? So this is what I was looking for, and but my goal was bounce or no bounce to be back short heading into the weekend. Remember that even futures traders futures normally trade around the clock, from when they open up Sunday evening all the way through Friday evening, with a 1-hour shutdown period every day. So one reason I like trading futures is I'm not subject to big gaps. There's hardly anything the shutdown every day is 5 to 6 p.m. Eastern. So there's really nothing that moves them there. But it's that weekend that, just like a regular stock or ETF trader, they have overnight risk every night, but you have the extra 2 days. And so being that we've had, remember, right now I'm on a 15-minute chart. I've pointed out repeatedly on the long-term charts, we'll hit on them briefly here, but we had the bearish engulfing candles on the weekly charts recently, which were so far has still held, and I'm viewing those unless proven otherwise, meaning we move above them as a likely top or a potential top for the market. And as such, that's formulating. Whereas if we didn't have that and everything else that we've had on the weekly and daily charts, things that I'm going to cover in this video here in just a second, I would most likely have gone home long today. But what I did is just before the close, had everything closed out right here. because that was where I expected this bounce to most likely take us. You can see on this 15-minute chart, we had positive, aka bullish divergence, just like we had back there, get a little bounce. If we carry next week, you can see this is, I'm going to move this line down here a little bit right now to reflect where I would be looking to add shorts. So if we carry on higher, and I could easily see that, it's not what I favor. Again, my convictions aren't strong. So I mean, if I didn't say this already, I came into the day heavy short. All the things I've been posting on the site, I've had a lot of positions lately, but a lot are overlapping. You know, for example, short Bitcoin, but also MicroStrategy, which is being one and the same really. Short NQ, but also short NVIDIA, SMCI. In other words, these are all the risk-on assets, but I've been overweighting those that I think, or including, I should say, supplementing an NQ short. That's how I look at it. When I'm long or short NQ, if I were to go long or short Apple, NVIDIA, Meta, that's a supplement. Those are very highly correlated trades, but I may at times favor more downside in one of those or upside in one of those stocks versus the, so I'll supplement that trade, if that makes sense, kind of enhance it. And sometimes I'll even do the opposite. I considered, but I didn't do it. I considered going home with the Tesla I took this morning as a indirect hedge. I'll get to that chart in a second. But I didn't. I'm going to add, I'm just looking here as I'm doing this video. That's what I can't help myself when I see a level I want to mark. Okay, so right here, these are your next resistance level. This was the first one. And again, I didn't, you know me. I always, if I'm targeting 20,933, I'm not going to sell at 20,933, or it's really 20,934. I'm going to sell a little shy of that in case the sellers step it early. But the market also closed. So that's what I did. So went home with about half, maybe even less than half of back into the positions that I reversed this morning from short to long, back short, but partial positions. Why? Again, two reasons. It's a weekend. Anything can happen. And number one, as I said this morning before the market even opened in that first post, support is support until unless broken. And so not only did it not break today, but we bounced off it. It was successfully defended. So therefore, I think it would be just a complete risk-taking move to try to bet, go home heavy short over the weekend, or even heavy long because we're still in close proximity. I'm just drawing out that line there. So that's it. These are your levels. Keep it simple on a 15-minute chart. 20,994, 21,142-ish, and then 25,384. 1, 2, 3. With the next and maximum bounce target. If anything be above this one, 21,665, then I'll say something else is going on. That's a pretty hefty resistance level. And again, maximum should this 15-minute positive AK bullish divergence carry through into a rally next week. And I will be scaling into additional short positions up to a pretty heavy position there, but not adding above that. More concerned about stopping out. Again, that's as of now, my trading plan. I always say that the charts are dynamic, meaning they change day by day, minute by minute, and therefore so is my analysis. Because if I see something else, and my analysis is far from binary, it's not, I don't look at, even if I'm only trading NQ, I'm also looking at the S&P 500. I'm looking at Apple, NVIDIA, Meta, Microsoft, Amazon. I'm looking at all those. I'm looking at other things, Bitcoin. I'm looking for other cracks or signs of confirmation or non-confirmation on correlated assets with it. So there's your levels. Let me go back to let's toggle back to that 6-month chart. Again, this is the bottom of the trading range here, that red line I have. I didn't want to get too wordy this morning. I want to get the post out to you. I almost went on to share my full thoughts. I expected that they would probably at the open punch down a little bit and run it down before that last hurrah came, and that's what they did. Not that it matters. It was just a little dip right after the open. And you can see, look, there's that same level on this chart. This is, again, the 120-minute, 6-month chart, 20,973. That's a bounce back to resistance. And that's where, again, was objective level. It still is right now, guys. The market's still open. You can trade after hours. QQQ is still trading. Futures is still trading. Hopefully I get this video out to you soon. And that's it. and if we go up, there's your next resistance level. Anything much more than that, it gets pretty thick, the resistance, and something else might be happening. So call this a scale back in zone, and to be full short here, or if we gap down. Now, if you want to know what I'm leaning towards, you just can't bet it heavy. What I'd love to see, and wouldn't be surprised to see, is a hammer down move on the future Sunday night, and a big gap down when the market opens on Monday morning, to see QQQ. Let me toggle back to that daily chart to see QQQ gap down below there. Why? I don't have ill wishes for a long side trade or anybody else. I trade the market for what it is. But what it would be better for the bear case, because it does two things. A big gap down denies shorts. A lot of long traders will have their stops just below the trading range. Some a little more than others. But when you blow past those stops, it's a beautiful thing. They're trapped in there. A lot of times, wait, I went past my stop. I didn't get filled because I had a stop limit order. Stop limit orders will only sell at that price or better, not worse. So then if you keep going down, they get underwater. But more importantly, to me, it also traps or denies short sellers that are waiting to see a clean breakdown in. If you gapped way down, let's just say hypothetically gap down 3%, most short sellers won't want to jump in and chase a 3% gap down. I wouldn't either. However, now I'm okay with it. What do I mean by that? If I had no position, I wouldn't want to chase in the stock market a 3% gap down, because if it proves to be a whipsaw, let's just hypothetically say we gapped down 3%, hit the 200s, and then exploded off them and reversed, I'm instantly underwater if it proves to be a whipsaw. And if it does whipsaw and gets back in the range, well, we could explode higher from there. However, we gap down 3, I'm profitable by that much or more from where I shorted here today. But if we gap down, big like that, I can then add to or double up on my existing short. In worst case scenario, if we reverse hard, I go back to break even. I've given back the profits I made on that gap down. So, but I can also add, like I said, I can add to it. That's how I like to trade. I just feel I don't like chasing things. I trade better when I'm ahead on a trade than if I get underwater right away. So I try to manage it that way. So either way, it's a calculated risk. But again, I'm going to toggle back. So let's just look at what's happened. We go to the weekly chart. Here's the very significant uptrend line off the early 2023 lows. Comes in. Here's that beautiful trading range. Again, so well defined. A blind man can see it. It'd be hard to miss, and such good. So today we hit, again, this is why I figured one last hurrah, very oversold to get here. Triple support. It really doesn't get much better than that. You have that beautiful uptrend line off the early 2023 lows. But more importantly, this level here, that was an all-time high in QQQ, pulled back, tested, boom, we broke out above it, and we've been back testing, which has formed this trading range. So that is excellent price support. And then if I turn off all the lines, you got it. There's your 200-day moving averages, which on this weekly chart will be 40-week or 40-period moving averages, same as the 200-day. And so, and last time we hit it was right here. That's when we were short at the highs, covered that low, August 5th, reversed. And back then it was for a reversal, for a swing, all out, it was not a brief bounce trade. This I'm viewing differently. Back then on the morning of August 5th, I put out a post saying I am covering all shorts and going hard long, full long. And that was for, because everything had hit multiple price targets being hit, the 200 days price support on all the market leading stocks, the indexes, blah, blah, blah. But this time, why is it different this time? Well, this time around, I expect this level is going to go sooner than later. And so we could hurrah off it again, more so, make a new high. But I think the odds are higher now, much higher than back then, infinitely higher. That we're going to break through. If you look at the drop too, remember this was a much bigger drop to get there. We're more oversold in the short term on the shorter term charts. As much as this drop has been off the top of the range, it's not much. So we could easily punch on down through there. Markets aren't even oversold and gap down, and that's again what I'd like to see next week. And if we don't get it, so I've given you my trading plan. I'm going to add to my shorts whether we gap down below take out that support, or we bounce back to those resistance levels I gave you earlier. Let's just glance at SPY. There's SPY, the S&P 500. We've got a lot of lines here. This low from, remember the S&P 500, I'm using the October low because it had a much higher low back here. But this particular trend line comes off the October 2023 low. And you can see nice reactions on it, and just a stick save. We cut down intraday, close the day back on it to close the week, this weekly candle on it. And so that is a level to watch as well. Then the 200-day moving averages, and then this 556 level there. Let's just quickly go through the FANGs. Apple daily chart. Remember, Apple had a divergent high, had a breakdown of that first trend line, back tested it, and then broke the second trend line, back tested, and you have this little minor trend line here that needs to go. We had a little punch through this morning, but a quick reversal. So next week, I want to see that, or whenever it is, that level go. Remember, this was a divergent high. We had the bearish engulfing candles on all the major indexes last week. So that's kind of an overriding factor as to why, if I have to decide, I can go flat, go home flat, long or short, if I'm talking just market exposure, net long or short. And the reason I decided to go home net short is based on the recent sell signals. We've had a lot of sell signals. So let's go through the rest of these. Apple, still above its 200-day moving averages. Remember, we successfully have pointed out here, we hit them, had a bounce. So once those go, that'll be a next sell signal. But we have quite a few check marks there. NVIDIA. Somebody asked today before I left between, I had to run out earlier too for pick my wife up at the airport. I got back and they asked about NVIDIA, my thoughts on NVIDIA. Well, and I said, it should stand to reason if I'm looking for a hurrah or a bounce in the market. All things tech, especially NVIDIA. NVIDIA and Apple are the two top components of the Nasdaq 100. And it's simple mathematics. When the individual investors like me, or individual traders, as well as professionals, hedge funds, algos, computerized trading programs, when they're buying the futures, when they've hit the buy button this morning after the open, NVIDIA gets the lion's share of every dollar that goes into the Nasdaq 100 futures or ETF QQQ, because it is the second. It's teeter-tottering with Apple between the largest and second largest holding. And so Apple gets the most, NVIDIA gets the second most of every dollar goes in there. Same with the S&P 500. And so, yeah, they're going to bounce for that reason and just the sympathy play. But we're still very profitable. That was our last short entry here. We bounced, but I reversed back. Now, I think here's where this one did it. It parked the week. We're on a daily chart here, but we closed the week back above the 200. This red line is a 200 exponential. But this to me was just a reflexive bounce in sympathy with the market, oversold. And so that one I also repositioned back into half my position there, maybe a little less. I'll have to look. Now what I want to see next is this level get taken out. However, if NVIDIA were to bounce a little more next week, 128.77, it's still the next resistance here. Or you can go to the 60-minute chart. And there's a downtrend line you can see on the daily. I was just on the daily. Here's the 60-minute chart. So this is my max bounce target. I don't think it's going there, or I'd still be long, but I'm very open to it going there, and I will add to my short back onto NVIDIA. I continue to add to that position up to, but not above that downtrend line. Anything more than there, it's going to increase the odds that the stock may break to new highs. So let's just look at the rest of them. Microsoft is a great example of, covered this one many times, of the analogy. I did a video a couple months ago comparing the top in late 2021, early 22 in the Nasdaq 100 to what's going on today, and it's almost uncanny. We just had, back then there were two of the bagged 7 or 8 that started breaking down below their 200s first and breaking support. This time around it's two different ones, but Microsoft is one of them. And Microsoft for months, going almost all the way back to July, has been testing the 200s. Can't get a rally going off them, but wouldn't give it up simply because it is a top component. This is number 3 right behind Apple and NVIDIA. So it's only going to go down so far without the rest of the lot breaking down. So, but it has clearly now, remember, I've been talking about it, hugging and testing the 200 days. Here was the last time it broke down below them. It back tested, got a little further away. You want to see the farther away it gets, the better it is for the bear case. And then that last final back test had a pretty impulsive rejection, and we closed the week solidly below the 200-day moving averages. And when you look at a weekly chart, you can see it here. Turn off all the lines. You can see now Microsoft, again, one of the most important stocks in the world, has clearly lost its 200-day moving averages. Amazon coming up, tested it today, pretty much at the lows, but also already broke down from this weekly bearish rising wedge pattern. When I look at the daily chart on Amazon, there was that divergent high. This was excellent support right there. You had an all-time high there, and then a breakout of that all-time high, back test, back test, back test, back test. And then recently that breakout failed, and we came back up. Support once broken becomes resistance. We got rejected there as well as the downtrend line, and we closed comfortably below there today. You do have the 200s just above. They need to go, but so far that's an additional check mark for the bearish case and something that I factor into while going home short. Alphabet broke down, gave up the 200-day moving averages recently. You can here, turn it off. You can see, this is, again, bulls, in a bull trend, you buy pullbacks to the 200s. You can allow a brief violation a day or two. Maybe this will be a whipsaw like that last one. However, all I can tell you definitively right now, it's not a whipsaw. Right now, it is a solid weekly close below the 200-day moving averages. Hard stop. That's it. So that's one of the most important stocks. Put in a divergent high back there, trend line break, and also closed below the uptrend line off the January 2023 lows as well. Not by a lot, but it closed below it. So again, hard stop. That's it. So this is cup 2 of some additional check marks. What I'm trying to get at, even with that bounce we had today in the market, these are some additional check marks that I'm viewing with these weekly closes. Meta closed right on it. I don't know if you can see it. This trend line comes off the October lows right there. Lots of nice clean reactions along the way, and we closed right on it. And you have this point here where you had all-time high breakout. So my next check mark, quote unquote, for the stock, for shorting the stock market, will come on a solid break down below 635. The trend line's just a hair above it, so I already have a price alert set at 635. When that goes, then you have the 200. Well, you have a little minor support about 600, but the 200 days, and then this next support level. But that would be a big sell signal. And again, not a short-term active trading type sell signal. This is a daily chart. This is a trend line that's been building for a long time. When I look at the weekly chart, it's a little busy, but bear with me. This is that same trend line there. And, I just, this massive, big negative divergence. First time we've had on both indicators. This is where the divergence is formed. So this is our most recent divergent high on the weekly. Last time we had almost identical divergence in scope and duration. The size of that line, the slope of it, everything is identical. Why should I be looking for anything different now? That resulted in a 76% drop in Meta. I know Meta's a crowd favorite. This is why to me, it's one of the best looking short setups. The time before that, we had an almost identical divergent high. Again, this is the divergence line right now because I'm looking at both indicators, the RSI right here and the PPO. Sorry, I drew that line wrong. Divergent high. And again, divergence isn't a sell signal. I always say that. And then this was a previous divergent high with, again, almost exact. You can take these lines, the slope, the duration of the lines, and they're almost identical. And that was a 44% drop. So we already had this trend line break and back test. So the sell signal is actually in play on it. It was, again, I think you can see. I know my lines. I have a lot of lines. I get busy. There's it. Breakdown, back test, and now you just have this secondary minor trend line that needs to go. Then when the 200s go, that's usually lights out. Once the 200s give way, then it's oh, here it is, free for all for the shorts. All right, guys. And I'll wrap up with Tesla. There's Broadcom. Broadcom needs to take out 188.44 in this uptrend line and the 200 days that come in together. So So what I'm getting at here, some of the market leading stocks have already broken down, give me some pretty good sell signals. But again, collectively, you need to see the majority break down, and I just gave you the levels, and that's when it's kind of that all-in heavy short the crap out of rallies back to resistance, because then you'll start to get that big waterfall type selling where the market drops 3%, 4% a day, does it again the next day, and then does it again the day after that. We're not there yet. And guys, I talk about this. I said it this morning. Support is support until it's broken. So these guys have a chance of rallying. And if enough of these guys rally off support, like Broadcom, those stocks that have broken down, like Microsoft, they could suck back up with them and make those prove to be false breakdowns. That's not what I think is going to happen, but if it does, I'm going to respect it. Tesla. Okay, Tesla was a no-brainer. Okay, so first of all, if you've been a Tesla bull wanting to get in the stock and you didn't buy it today, it's dropped 44% in just a matter of a couple months. 44%. The stock's been cut almost in half. So to say it's oversold would be an understatement. You can just look at the RSI and see the RSI is buried, deeply oversold. But to excellent support, let's look at that. And again, this is a chart I gave you this morning. You have a beautiful uptrend line off the lows back in early 2024. You have my third target zone I've given you for months now, a couple months there. T1 hit, T2, T3, we hit the top of the zone, and turn off all the lines. You've got the 200-day simple moving average there as well. I also gave you a 60-minute chart, and that had different targets, for that trader. Hit that level, positive divergence by the skin of our teeth, but we do have lower lows in prices and equal lows on the indicators. So that is positive divergence. These would be, I added this line since this would be the first potential target, 308.36. Now, if the market were to just crap out next week, let's say early, like Monday, starts down, goes down all week, Tesla's going to have a hard time swimming against the tide. Is it possible? Yes. Is it probable? No. Okay. So that would be your first target there. If you bought it today at the lows where it was highlighted, it's a great idea. You're up 12%. No, you're only up 8%. 12 would be that first target around 308, potential target, and then 19% there. Look, if QQQ can rally back up towards the upper part of the trading range, this is my absolute favorite stock, and I think we could probably hit that downtrend line. That's going to be a gain of about, if we get there, it's price resistance at 360.45 and the intersecting trend line. It'd be about a 31% rally in Tesla. However, if the market craps down, this is just one of the MAG 7 or 8 stocks. It's just going to most likely come under selling pressure, and that's the nature of a bear market. Even the best support levels and nice divergence and everything is just bull fodder. It's just, sucks in money, and then you just see support levels. You get these little minor reactions, but instead of the big reversal, like in a bull trend, where you might go up there, rally there, or even eventually go into new highs, you get the little reflexive bounce, or what I call last hurrah, and then boom, and then down. So, all right, so there's Tesla for you. What else? Let's cap it here. I've had a long day. This is all, because if I start, scrolling and going into commodities, and then the very ag commodities and energy commodities, and then treasury bonds, and where do I stop? Individual stocks. As I said, Bitcoin was the other one. That Bitcoin was, likely to rally for all the reasons I stated earlier. I gave you that, bounce trade idea. And again, Bitcoin is super correlated and has been with the stock market for a while. So to think that the stock market would bounce today, not Bitcoin, wouldn't make sense. And Bitcoin did. We got a decent bounce, nothing huge. All right, guys, I'm going to stop the video here, and of course, I will pick it up on Monday. If I see anything crazy on Sunday night for whatever reason, maybe I'll post some chart. But the thing is, you have my charts. The levels are already marked up. You can go back to previous videos, or static charts, and see those levels there. And if you have any questions, post it. I'll try to get back to you. I did answer a couple today when I got back, but but I'm going to shut down for the weekend. All right, guys, this has been Randy Finney with Right Side of the Chart. Have a good one.